In today's global economy, a new asset class is quietly taking center stage. Carbon. What was once just an environmental metric is now a core component of institutional portfolios and corporate strategy. And this shift is creating a market with enormous scale, but also enormous complexity. To put some numbers on it, the global market for both compliance and voluntary carbon assets has already surpassed $850 billion. That valuation is only going up, driven by stricter regulations and a wave of corporate net zero pledges. But as the numbers get bigger, the need for serious, institutional-grade infrastructure becomes absolutely critical. You see, the market's complexity isn't an accident. It's baked into its very structure. You've got data scattered across dozens of different registries. You have this major split between government-run compliance markets and the voluntary side. Assets live in different worlds, some in traditional databases, others on blockchains. And layered on top of all that is this constantly shifting patchwork of global regulations. Trying to get one coherent view of the market, it's incredibly difficult. All of this complexity really leads us to the core problem that every professional in this space is wrestling with. And it's not that there isn't enough data, it's that there is a fundamental lack of context. It's so important to draw a clear line between two very different kinds of tools here. On one side, you have carbon accounting software. That's all about looking inward. It helps a CFO answer the question, what is our company's carbon footprint? But market intelligence, on the other hand, looks outward. It's for an investor or a strategist trying to answer, what is the real market value and risk of these assets? They serve completely different people with completely different goals. So the fundamental challenge becomes crystal clear. Decision makers are not starved for data. If anything, they're drowning in it. Data can tell you the spot price of a carbon credit today. But context tells you why that price is moving, what new regulation might impact it next quarter, and how its quality stacks up against similar assets in a totally different part of the world. It's this lack of actionable context that creates blind spots and, ultimately, risk. So, to solve this context deficit, a new kind of infrastructure is starting to emerge. What the market really needs is a dedicated intelligence layer, something that can cut through all that noise and provide genuine clarity. That layer is CRBN.Credit. So, what do we actually mean by a carbon market intelligence layer? Well, think of it as a system built for one purpose: to pull in all of that scattered data, standardize it so it speaks the same language, and then interpret it. The end goal is to provide a single, coherent, institutional-grade view of the market that you can actually use for strategic decision-making. And to be perfectly clear about its role, it's just as important to understand what CRBN.Credit is not. It's not a trading platform, it doesn't sell carbon offsets, it is not a corporate emissions calculator, and it's not trying to be a project registry. The focus is completely singular, providing data, insight, and decision support. So let's look at how the platform thinks about something like pricing. It goes way beyond just a simple spot price, which frankly can be pretty misleading on its own. Instead, it calculates a composite fair value. To do that, it analyzes volume-weighted data from exchanges, from decentralized digital markets, and from over-the-counter brokers. This gives you a much more stable and realistic valuation, which is essential if you're managing an institutional portfolio. And it's not just about today's price. The platform is designed to provide forward-looking analysis. It uses AI to identify the underlying structural trends in the market and then model future scenarios. This helps users get a sense of how potential policy changes or big shifts in supply might impact their positions down the road. One of the key functions here is embedding regulatory context directly into the data. The system lines up market information with critical frameworks, like the EU's emissions trading system or the integrity principles coming from the ICVCM. This makes sure the insights aren't just interesting, but that they're immediately useful for compliance reporting and are effectively audit-ready. Ultimately, everything the platform produces is meant for high-stakes decisions. This isn't just about making pretty charts. It's a suite of tools that supports portfolio construction, helps with sophisticated risk modeling, and really informs long-term corporate or investment strategy. So, who actually needs this level of intelligence? Let's take a look at the specific professional groups the platform is really built for. The user base is made up of serious market participants. You have institutions and funds that need this for accurate valuation and risk management. You've got carbon brokers and asset managers who rely on it for sourcing and advising clients. And then there are the corporate strategy teams, the consultants, and the analysts who need it for robust due diligence in what is still a very opaque market.
This table really draws a straight line from the problems plaguing the market to the solutions a platform like this provides. It takes the chaos of data fragmentation and turns it into smarter asset allocation. It cuts through pricing opacity and gives you accurate portfolio valuation. And it transforms regulatory uncertainty into a solid foundation for real strategic planning.
This brings us to the all-important question of timing. Why is an intelligence layer like this so essential at this specific point in the market's journey? Well, it's because the market is maturing, and it's maturing fast. We are moving out of an era that was defined by voluntary action and into one where tightening regulations and the demands of institutional capital are what matter most. This is a huge shift away from just sustainability optics and towards true financial accountability. And that kind of shift requires standardized, auditable data as table stakes. And that reality leads directly to the long-term vision behind the platform. This was never just about building another software product. It's about building core market infrastructure. This long-term vision really comes from the founder, Suptik Guha Roy, who is a builder at his core, focused on creating structured, data-first systems for complex markets. His entire philosophy is really captured in this quote, the belief that the future leaders in this space will be the ones who understand the data deeply, not just the ones who can transact the fastest. You can see the logical evolution here. The platform starts as a centralized intelligence hub. Over time, as it's adopted, it's positioned to become a standard industry reference point for pricing and quality. And the ultimate goal is for it to become an essential piece of core market infrastructure, as indispensable as a financial terminal is in any other mature market. So as we wrap up, it becomes clear that the defining factor in this next chapter for the carbon economy really comes down to one simple concept. We are still in the very early stages of a massive economic transition. And in this new carbon economy that's being built around us, the ultimate asset isn't just the carbon credit itself. It's the intelligence used to price it, manage it, and strategically deploy it.